How's it going, everyone? Today, let's go ahead and talk about Crown Castle, also known as CCI. This is a REIT, and they own cell phone towers that give people access to 5G and 4G networks. They are currently suffering from the high interest environment as people have transitioned to other modes of gaining a safer high yield. However, when interest rates were low during the pandemic, CCI ballooned up in valuation because people weren't satisfied with getting less than 1% back in their bank accounts, bonds, or treasury yields. In this video, we are going to look at the intangibles, the finances, and run some valuation models to determine if it's a delicious or disgusting dividend stock. Now, CCI's PE ratio is 32.1. However, this is a REIT, so we do not look at this. In fact, you want to disregard it. Instead, you want to look at its price to AFFO. And when we look at that, their quote-unquote PE ratio is a 15.1, and their industry peers are sitting at 17.2, so they are undervalued in comparison to their peers. Now, this is a channel that is focused on dividend compounders, so let's go ahead and check out their dividend over the years. Their dividend yield is actually quite juicy at 5.7%. They pay out $6.26 annually, and the payout ratio is 85%. It's a little high, and that's because their stock price has been in the cage with Conor McGregor, and it's just been beaten up, so it's pretty low right now. I think they're near their 52-week low. However, as the stock price recovers, their payout ratio should be around 65% to maybe 75%. And Crown Castle is growing their dividend at a rate of 8.2% year over year. So in 2015, they paid out $3.24 a share. You fast forward throughout the years, and now they pay $6.26 a share. That's amazing. That's what you want to see as a dividend growth investor. And the dividend growth rate is 4.8%, but we're going to talk more about that here in a little bit because this is not true. Crown Castle, and they are in the business of managing cell phone towers and small cells in which the cell phone companies pay to utilize those assets. And if you have a phone that's capable of utilizing 5G, then you understand just how fast and efficient mobile data networks are. Unless, of course, your experience with 5G was on a crowded New York City street, then you probably think it's trash. But anywho, Crown Castle also manages fiber assets that provide an insanely fast internet experience. Fiber is changing the name of the game. Although some people would disagree with me and say Starlink is changing the name of the game for internet, but Starlink doesn't provide us fast internet speeds. Crown Castle's competitor, American Tower, despite its name, operates mostly cell phone signal towers overseas, whereas Crown Castle operates in the US. So the major clients for Crown Castle are AT&T, T-Mobile, and Verizon. And what you see on your screen right now is the market growth for cell towers from 4G to 5G. It's an industry worth billions of dollars because more and more consumers expect faster internet speeds as they scroll on TikTok for 4 hours on end. The forecast projects a 21% annual growth rate to this demand. And who's going to win? Crown Castle. And you know what? I would describe myself as being a patriotic American that's also a veteran. Some folks talk a lot of trash about the US, but I'll say this. If you've ever gone on a long road trip or done a cross-country drive, you'll quickly realize just how beautiful America is. And sure, we do have our own problems. However, the mountains, the trees, the lakes, the rivers, etc. When you're driving through the middle of nowhere in Wyoming and you have cell phone signal, that's thanks to Crown Castle. When you have cell phone service at a national park or at a restaurant, that's because of Crown Castle. And the reason why I'm bullish on Crown Castle is because when you take into consideration the addressable market and target demographic, what you see on your screen right now, the US is the most ideal customer base for cell phone mobile data. Not only do Americans consume more mobile data per month than any other country, but they also spend much more to get those faster speeds. Crown Castle. With $10,000 invested on the exact same timeline of January 1st, 2014, and 10 years later, that final balance would be $21,000. Their CAGR is 7.8%. During their best year, they went up by 35%. And during their worst year, they went down by negative 32%. $21,000 from $10,000. You love to see it. Now, with all those factors taken into consideration about CCI, what is the fear and greed index? What is moving the stock market and investors in Wall Street right now? Apparently, the sentiment is extreme greed, a 77 out of 100. About a week ago was also extreme greed. A month ago, it was greed. To me, I interpret it as semantics. What it says is the market is now being optimistic about the future of the economy and the stock market. What they are pricing in right now, 3 to 6 months, is for the interest rates to finally come down slowly. So I'm not an economist, but I think what's happening is people are now slowly transitioning their cash being held up in bonds and treasury notes to now investing back into stocks. Now let's go ahead and look at their revenue growth throughout the years. Back in 2015, they generated $3.6 billion. You fast forward and it's been going up in a steady, consistent trend. However, this is one of the primary reasons as to why their stock price went from $200 to what it is today. It is relatively flat. And the fact that their revenue is flat in 2023, and this is the top line, by the way, the revenue, is not a good look. As a matter of fact, they announced last year that their cash flow was going to bottom in the first half of 2024, which means up until June of this year, things are not going to be looking too hot for CCI, which to me could scream a buying opportunity. However, when the CCI leadership team announced that, the investors did not like it at all, and they started selling out like crazy. And when you look at their bottom line, which is the net income, back in 2015, it was $1.5 billion. And when you fast forward throughout the years, it's been up and down. However, in 2023, it's now flat, right? It's $1.5 billion, the same as it was back in 2015. But it's a lot better than it was in 2016 or 2017. With that said, the leadership team seemed to be pretty optimistic for the second half of 2024, and they expect to raise the dividend payout in 2025 because in 2024, they said that they're going to keep the dividend flat, which means they are not growing the payout this year, which is why earlier I said that dividend growth rate that you saw of 4.8% was a little misleading. And that's why when you evaluate companies and stocks, it's so important to listen to the earnings calls and to dig through the investor relations presentations and the transcripts to see what's going on behind the scenes. Because if you just went by this number saying, hey, it's a 3.1% dividend growth rate, or this number saying it's 4.8%, that could lead to a miscalculation in when you start doing the intrinsic value for CCI. But now that you know in 2024 there's not going to be a growth rate for their dividend, it should add a little color to the blurred gray lines. Next, let's take a deeper look at the technical indicators to see what their stock price movement has to say about their future. So back in October, CCI actually reached a price of $84.98 a share. That's when investors were just selling out like crazy because there was a lot of fear and doom about inflation. And that's reflected by the RSI of 25, which means that CCI was in the territory of being oversold. But since then, it looks like the investor sentiment has been healthy surrounding CCI because the RSI is now currently in the high 50s to maybe the 60 range, and CCI seems to have a line of support at around the $105 range. So I would say as of right now, things look okay. The RSI looks healthy, they have a line of support, and as a matter of fact, as of recently, they hit their line of resistance of about $111. Once they penetrate through that upper Bollinger Band, that means CCI will potentially rally again. What does that mean? Maybe like $114, $115, and then the Bollinger Bands will reset with a new line of support and new line of resistance. Okie dokie, everyone. This is my favorite part of the video.
How do you find intrinsic value in a company?
Well, intrinsic value is what is the number that if you were all-knowing about the future and could predict all the cash that a business would give you between now and Judgment Day, discounted at the proper discount rate, that number is what the intrinsic value of a business is. In other words, The only reason for making an investment and laying out money now is to get more money later on, right? That's what investing is all about.
Now we're going to run some valuation models to figure out what the intrinsic value is for CCI. And then we're going to compare that to what the Wall Street analysts believe the price target should be. So the first one is going to be the REIT Multiples Valuation model. Essentially, we're going to compare CCI to their industry peers to figure out a market-derived value for CCI. So we have American Tower, CBA Communications, Equinox, Digital Realty Trust. What that spits out is a median price to AFFO of 22. So think of that as the PE ratio for these companies. However, when we look at CCI's price to AFFO, currently it's at 15.9. And when we take 22 into consideration with CCI's current price to AFFO of 15.9, that gives us a stock market price, $153.36 a share, which is not too crazy, considering that they were trading for about $200 a share about a year or two ago. Next is going to be the net asset value. Essentially, the NAV seeks to figure out the actual value of the REIT's holdings, which is the cell towers, by taking its market value and subtracting its debt. And to do that, we're going to forecast it with its net operating income to project a NAV per share intrinsic value price. This calculation is very subjective because there's no single truth to how you're supposed to do it. And the numbers that you plug in for the growth rate and cap rate, very subjective. Anyways, when we take all of these into consideration, all of the data and the numbers, that gives us $23.22 a share. This is a very low intrinsic valuation. So when we get to the end, we might even just delete it altogether. Next up is going to be the dividend discount model. Essentially, we're going to figure out an intrinsic value based on their dividend growth rate and payout. So in 2019, they paid out $4.50 a share. You fast forward and now it's at $6.26 a share. However, for 2024, the dividend payout is going to be flat and remain at $6.26 a share. So even though the average dividend growth rate is 8.6%, in my opinion, I think that's a little optimistic. So we're going to divide that by 2 and plug 4% into the equation instead. So when we think about CCI's average dividend growth rate at 4% for the next 5 years or so, that gives us an intrinsic value of $162.76 a share, which brings us to the conclusion. Is CCI a delicious or disgusting dividend stock? So the intrinsic value based on the valuation models is going to be $113.11 per share. However, you could probably agree with me that their NAV intrinsic value of $23 a share just sounds ridiculous. So let's try deleting that from the formula and see what happens. Then it gives us an intrinsic value of $158 a share. Now let's go ahead and see what Wall Street had to say. Wall Street believes that CCI should be at a price target of $122 a share, with a high of $155 and a low of $104. So when we take our intrinsic value into consideration, we are looking at CCI from an optimistic lens. However, if we reintroduce that NAV intrinsic value back into the formula and we keep it at $113, then we're at the lower end of the spectrum. So it kind of depends where you're at. So we said $158 a share. Wall Street says $122 a share. So based on everything that we looked at, the conclusion is CCI is pretty delicious. However, now we need to figure out an acceptable buy price.
That margin of safety concept boils down to getting more value than you're paying.
So for simplicity's sakes, we're just going to go ahead and say that it's trading for about $110 a share. With a 10% margin of safety baked in, then the acceptable buy price is $142 a share. However, if you are to buy it at its current price of $110, then you would get a 30% margin of safety. However, let's go ahead and plug in the Wall Street number of $122. When we do that and you bake in a 10% margin of safety, then the acceptable buy price becomes $109.80 a share, which is essentially the price that it is trading for right now. So what are my thoughts? Well, I think Crown Castle is a good, solid REIT that in the short term definitely has headwinds in the form of slowed growth from their Sprint contract being terminated. Oh yeah, I forgot to mention that, by the way, which was a major source of revenue growth. So the EPS guidance for 2024 from the management is $6.85 in the low range to about $6.97 in the high range. So it's definitely enough to cover the current dividend payout of $6.26 per share. But yeah, there isn't much room for error for the next 2 years, for this year and for the next. Optimistically, the leadership team has confirmed that they are expecting the dividend growth rate to go back to 7 to 9% a year in the year of 2025. So with all of that taken into consideration, my personal feelings toward CCI, I am bullish. Because as time goes on, I think that us Americans will consume more and more mobile data. And let's be honest, 5G mobile data is sometimes faster than our home internet or McDonald's Wi-Fi. I'm not even joking. Sometimes when I'm on the toilet dropping a number 2, I like to play a game on my phone. And when I'm in my bathroom, the Wi-Fi signal is not the greatest because it's pretty far away from the living room. As such, I don't get good ping and internet speeds while I'm gaming. So what I do is I turn off my Wi-Fi and just use my mobile network because the 5G is so much more consistent and faster. And that data consumption from the consumers will lead to the cell phone networks needing more towers to improve the congestion and to optimize the speeds for the consumer demand. I can't be the only one who actually enjoys using 5G. Like maybe 10 years ago, yeah, mobile data was trash, really slow, and throttle no matter where you go. So I think CCI has a bright future. I look at CCI the same way I thought of Qualcomm and Broadcom back in 2019. The internet sentiment back then were these companies were obsolete and cell phone technology wouldn't be lucrative going forward because Apple was just going to create their own in-house chips and Samsung was just going to do their business elsewhere and etc. But now we realize how important the hardware component of phones are. I think just as important is the connectivity and mobile data aspect. If I had to make an educated guess, I think when inflation starts slowing down and the interest rates go from like 5% back down to like 1%, CCI will be a premium stock once again. However, I could be wrong, but I think in the next 2 years or so, CCI right now, people are going to be like, why didn't I buy in when CCI was trading for about $90, $95, $100, $110 a share when it balloons back up to $155 a share? I could be wrong and inflation just drags out and CCI just becomes bankrupt and everyone starts using Wi-Fi instead of mobile data. So that's my own personal opinion. I think CCI is a good company and a good dividend REIT. With that said, I'm probably going to be dollar cost averaging once the price reaches around the low 100s. So I'm talking about like $103 a share, $101 a share, and if it reaches below $100 a share, then it's definitely a buy for me. So that's where I'm coming from. But before you reach the conclusion that you like CCI, please do your own due diligence and research to figure out if you actually like it. Anyways, until next time, good morning, good afternoon, and good night. Dividend Compounders with Cheese, signing out.